Let's get to the here and now across the market open with Peter McGuire, Trading.com CEO here in Australia, joins me now. Good morning to you there in Coogee Beach. Pete, I hope you're doing well. Talk to us about what you're expecting from this Asian session, please.
Well, good morning, Nadine. Happy Monday. I want to see how it inhales naturally from not only US dollar, but as far as equity markets across today, where commodities run. If there's any bounce as far as gold, it's been very volatile over the last couple of sessions. Of course, little brother silver. And if there's any surprises out there as we roll forward to Thanksgiving, and then naturally what the Fed positioning is. So what's been quite, I think, a bit of a daylight awakening. 72% probability of a rate cut last week from swap traders for the Fed, and now that's under 50%, Nadine. So it seems to be contracting, and these are all moving parts to get some sort of feel where Fed policy is going to be come this time next month.
Well, I will say that early in the throes of this Asian session, we've got S&P 500 and NASDAQ futures coming under pressure. But on that interest rate conundrum, really, it is a bit of one, isn't it? Because, of course, we don't know when or how the hard data, the real data, is going to get into the hands of those FOMC members, considering the government shutdown.
Well, exactly right. I mean, Fed Chair Powell's statement, driving in fog, I think that summarises it fairly well. The other side, of course, is that they expect the data later this week for CPI and possibly a jobs report of some number for September, but by the looks of it, possibly no numbers at all for either for October, Nadine. And then that really puts a handbrake on a decision policy perspective from the Fed. So, all of these components, it's very hard to make a decision if you haven't got the data. And that really is that's the conundrum, as you correctly said.
Yeah, all right. You know what else is a conundrum? In the UK, a mini meltdown, I heard it called, for gilts. For those who have not tuned in, what really spooked at the markets there?
Well, I think a couple of things. First off, that inflation number, you've got the realization it's driving up, and we were expecting food inflation by the fourth quarter and later, and that the time frame was pretty much mid-November. You'd be approaching that 6% mark as far as food inflation. So these are great concerns. The UK seems to be spluttering, and naturally, to take on more new funds, you've got to boost rates, and that's what it's all about in the gilt market. And any market relies on capital, and that's the true essence. You've got to look at the bond market. Really, I look at that, the first one, and then US dollar index each day, and that gives you, I think, the setup of how things are in Wall Street, and then that rolls across naturally to other markets. And UK is a pretty big market, Nadine.
Yeah, it's a big market, and the prospect of rising taxes, didn't go down that well. All right, so we've got...
Well, Starmer's got his hands full. I mean, there's every possibility you could see a roll of Starmer, and then, they're talking 50 billion worth of tax cuts, and then naturally they've put a handbrake on that and rolling it back to around that 30 billion mark. So there's a lot of pain on Main Street, and that's much concern for the POMs.
So back to currencies, you mentioned you look at the dollar setup to get a good idea of where minds are at on Wall Street. So why are we watching the dollar dropping after the US government shutdown came to an end?
I think it was overbought, and we got to that point of over 100, Nadine. And if you look at it over the last probably 6 weeks, you were down to that high 95-ish, 96 sort of handle. And then it's rolled all the way through to 100 plus, and now it's back under that 99.20 sort of number. So it's the old story. There's movement there. It's the largest traded market in the world, and on a daily basis, it's massive as far as currency transactions, and that's where the opportunities lie. So I would say that there would be a concern. Are we going to see a rate cut? It's still 50% as far as a probability. So that's what the traders are looking at for next month, and they're probably selling positions, trading it south, and that naturally moves the market.
So what I also wanted to ask you about, though, was oil. So we saw pressure coming through on commodities. What's driving the price of oil higher?
Well, I think, again, that was oversold, and it hit that 58 handle as far as WTI. We all understand the positioning from OPEC Plus and what's going on from the States as far as the drill, baby, drill mantra and into 2026. So again, oversold. I think the premium that we were allocating from a Ukraine positioning as far as war premium is narrowing. The energy markets have been under a constant downside push over the last 6 months and certainly over the last couple of years, Nadine. So I'm thinking as we roll into Q1, I wouldn't be surprised, 60 is the new handle for Brent, 55, 56 sort of number for WTI. And I just want to see what happens from a policy perspective from OPEC. And if there's no surprises, I feel as though that glut is really going to take some heat out of the market, and it probably got more dollars to short.
All right. We've got, as I mentioned, E-minis coming under pressure. We've got the local market down by about 0.4%, Pete. We're obviously waiting for other regional markets to get online. So where will you be looking today as this sort of session progresses?
Japan. I naturally look at Nikkei, what's going on with the Nadine, and then get a true indication as far as how that positions across South Korea and the likes of India and so on. So I'll have a look at our market naturally and just keep the screens on and view and see if the opportunities are there as far as market movements and so on.